Good morning, everybody, and welcome back to Beat the Bell, presented by King Capital. We miss you on Monday, but we are fired up to be back with you guys for FOMC Wednesday, which is the most anticipated FOMC since the last FOMC. You guys know how it goes, but seriously, there's lots to talk about on this morning's show. And to do that, we've got a loaded panel starting with Money Mander. Money Mander, good morning to you.
Good morning. Happy FOMC. You know, this is a holiday for me and Diamond, so we'll get you guys prepped.
I think everybody loves FOMC. Lots of fun to be had. All right, Diamond Trades, good morning.
What's going on, guys? Super excited to talk about FOMC. Let's get into it.
All right, Moe Mamba, good morning to you.
Good morning, Ando. Yeah, today will be exciting to see what happens, where we close at. Let's get it.
And last but certainly not least, Ramsay Rippers.
What's up, guys? Good morning. Let's do it.
All right, we are going to jump right in to Fed forecast with Diamond Trades and Money Mander. Fed forecast, economic calendar. It's a big day. Take it away, fellas.
Do it.
Yep, let's go ahead and start with the economic calendar since we didn't have anything on Monday. So today, obviously, FOMC decision at 2, and then the Powell press conference at 2:30. We've got some housing data tomorrow and building permits and new home sales, as well as the usual weekly jobless claims. And then the week will close out with durable goods orders and S&P Global Flash PMI. So that's for the rest of the week. All right, let's go to FOMC, which we are going to have today at 2 o'clock. So the market has really been ripping ahead of this FOMC interest rate decision. With Dow having its first 2 consecutive green closes for the first time since the collapse of SVB, stocks have risen on the back of the strong and swift response by U.S. regulators to address any instability that they've seen in the financial system. As of yesterday, the market was pricing in an 83.4% chance of a 25 basis point hike, which would bring the target range to 475 basis points up to 500 basis points. That 5% upper bound that has been talked about, for over a year now, finally it looks like it's going to come to fruition today with a 16.6% chance of a pause, a zero rate hike. Right? They don't do anything. So just 1 month ago, as you guys can see at the bottom of the screen, those probabilities were actually starkly different. Just 1 month ago, we had the probability of them going with a 25 basis point hike at about 76%, and then the probability that they actually raised by 50 basis points is at 24%. All of that in just the last month. The chances of us raising by 50 has gone all the way down to 0 on the back of this financial instability that we saw with the regional banks, which was made people believe that the Fed really is not going to raise 50 basis points into such instability and really sort of shoot themselves in the foot, cause more damage. At the same time, the market doesn't believe that that's enough to fully put them on the sidelines to keep them from raising rates at all. They still have to battle inflation, obviously, which we know has been sticky, particularly in the services sector. And so it's going to be interesting to see which one truly does come to fruition. The possibility of a halt, even though it is low right now, obviously it's 16%, still has to be taken seriously, right? High yields are sort of viewed as a headwind for stocks. And so a pause theoretically brings us closer to a cut, right? Which we all know is good for those longer duration risk assets. And it seems like some of those risk on names have sort of front run this move, at least so far this week, right? We saw particularly high beta stocks yesterday. We saw coin up like 7%. And even this morning, GameStop up 50%. I know that's going to make some people smile. But, it seems like they're sort of front running that move, right? That possibility that we do get a pause, or maybe the possibility that Powell does have a more dovish tone in this meeting compared to the last ones. It's very interesting also to see what he's going to say about the SVB collapse, right? You have a situation where obviously you can't just lie. He has to address some of the problems that have arisen since the last FOMC meeting. But at the same time, you don't really expect him to come out and say, there's some serious weakening in the financial system. There's some systemic risk in the financial system that we're very, very concerned about. I think that would almost talk it into fruition, right? And really hurt their cause, right? And trying to shore up the financial system in general. So it'll be very interesting to see how he sort of navigates these two really difficult situations that he's in. One being obviously the weakness in the financial sector, and the second being the fact that they do have an obligation to bring inflation down. So, Mander, what are you looking at going into this FOMC?
Yeah, nail on the head. I have a lot to say on the high beta rally we just saw, but I'm going to save that for another episode. Obviously, I think the press conference is going to be important, as it always is. But the one thing I'm really watching here is the move we've seen in the VIX recently. So at the last meeting, me and you were talking about how we saw this major run-up of implied volatility going into the meeting. And we were kind of saying, if we get the hike as expected, you're going to then have that crutch on realized volatility causing a big squeeze. And that's exactly what we saw. The VIX was up 15% going into the meeting over the 2 sessions leading into it. And then as everyone unloaded their hedge puts and dealers had to buy them back and get long to be delta neutral, we saw that vol crush and squeeze. And SPX rallied 4% over the next 3 sessions. But going into this meeting, we've seen the VIX down 23.5% over the last 3 sessions. So it looks like the hedges are kind of getting unloaded before the meeting here, which I think is really interesting. It kind of sets us up for a reverse situation of what we saw the last time. I think it looks like people are already long. Hedges were dropped before the meeting. And so I think, the 25 basis points, in my opinion, is almost consensus here, right? Especially after the ECB hiked the 50 basis points that they still went with. I really personally just don't see a pause, but it looks like a lot of people are getting long and taking on risk going into the meeting, as you said. And financial conditions have loosened significantly as we get into this meeting. If we can pull up this 2-year chart here, it's crazy. We had just 2 weeks ago an 80% likelihood of 50 basis points today after the testimony by Powell. And then obviously the regional bank run happens. Everyone kind of got of the mindset that between the two and financial solvency and saving the financial system or combating inflation, the Fed's obviously going to choose saving the banks when stuck between a rock and a hard place. And so we had these yields drop off the face of the earth here. The 2 years down 80 bips over the last 2 weeks. And then in parity with that, obviously the S&P 500's up about 200 points in the last 7 trading sessions. So all of this together, it kind of puts us in a really interesting position going into the meeting today that we haven't really seen. Everyone's getting risk on going into the meeting when just 2 weeks ago, it seemed like everyone couldn't wait to get risk off. We saw the safe haven trade coming in with everyone loading gold, everyone loading bonds, getting money out of banks, selling their stocks. No one wanted anything with any risk, right? And now we've seen the complete opposite after the banks went under. It's kind of crazy. I think everyone's looking at this increase in the asset sheet being seen as QE instead of the liquidity loan that it kind of is. But that's really the situation we're in right now. So I think Powell has a really important job to do today, not only to address the bank situation, but address what the Fed is looking to do moving forward and whether they're still going to continue with quantitative tightening, because that's going to be a really big one. If this was only a collateralized liquidity loan and they're still going to continue dropping assets off the balance sheet like they've been doing, then I think the market looks at this completely differently than it currently is, right? And then going into today, obviously the big thing on top of the press conference is going to be their outlook. So we get the quarterly outlook for the rest of the year. And assuming we get 25 basis points, which the markets are pricing in at over 80%, like Diamond said, the big thing that I think moves markets is going to be their outlook, mostly on the terminal rate. So right now, we only had, after seeing the upper bound at like 575 basis points just a couple weeks ago, right now there's only a 3.4% probability that we end the year over 500 on the lower bound, which would be just one more 25 basis point hike after today, assuming we get 25. And so we're going to get that dot plot from all of the voting members today. If you remember, just back to December, 17 of 19 saw us over 500 by the end of the year. So that would not only mean another 25 basis point hike, but no pivot. So at least one more and then a pause for the duration of the rest of the calendar year. So I think that, along with the GDP outlook, along with the unemployment rate outlook, those are going to be the big hits to watch today.
It would kind of surprise me if he came out and said they were gonna pause. I feel like even if they were planning on pausing, why not like leave the door open, like give yourself some wiggle room in case you got a hot CPI print or a very cool or a hot job print
Yeah, I agree. And I think especially after the ECB still hiked, like if I'm the Fed, you don't want to have to be the first Federal Reserve that has to pause and start going towards that pivot thing. So I think the ECB, by having gone first, kind of set the standard there.
He'll probably like tease at it and be like, maybe leave it open for discussion.
Data impending.
Yeah. All right. We'll see. That'll wrap it up for us here on Fed Forecast. Pass it back to Alejandro.
Thank you, fellas. Money Mander telling us they have removed the hedges and that everybody is long into FOMC. It's going to be super interesting. I think I'm more excited for this FOMC than I have been for ones in the past. It's certainly a big one. Let's get into some charts here. I'll share my screen. We'll talk about the system. So we've got the 30-minute chart up here. We've got the hourly chart down here. 10 and 50 SMAs on the SPX charts. Let's dive right in. So we, of course, got the buy signal on March 16th. The technical bullish cross of the 10 SMA over the 50 SMA. And what we have seen following was a textbook uptrend and textbook system behavior. So you get the buy signal, rally up, 10 SMA serves as support, breaks down, comes back down. The 50 SMA starts to put in an uptrend. We bounce, served as support, and from this 50 SMA bounce, we've seen a 100+ point rally. So anybody following the system, trading the waves long and buying the dip at 50 SMA support did well. Those are some great trade opportunities to be had. And of course, why has this move seen such strength? Well, the two charts were telling the same story. Last week, I noted that on the 16th, we had broken over the 50 SMA on the 1 hour chart for the first time in a long time, okay? That's obviously notable. When you break over the 50 SMA on the hourly chart, there's a better chance that things continue to trend in that direction. And that's exactly what happened. We came back down. We tested our 50 SMA support, then got another rally with the 10 SMA now serving as support. So this is all fine and dandy. And the chart has been rather clean headed into FOMC. Bulls showing some pretty serious strength here. But, of course, FOMC, one of those events that's going to bring a lot of volatility. So for me, here's what I'm doing. This morning, I'm going to look for a trade up until around 10:30. After 10:30, I expect things to slow down. So I'm hoping to be able to get in a trade this morning. I have some setups that I have my eyes peeled on. But the bottom line is, by the time 2 p.m. comes around, guys, 2 p.m. to 4 p.m., you might as well go to the Hard Rock Casino. And, I mean, it becomes very difficult to trade. And there are certain strategies that people have, you know, playing the fake outs and this move and the other. But at the end of the day, the market is extremely irrational. And I'm anticipating that today, especially because of the amount that's sort of hanging on this interest rate hike decision, things are going to be even crazier than usual. So I'm hoping that I can make a winning trade before 10:30 today. Ideally, I am in runners or a runner headed into FOMC. So I'm in profit, risk free. And if something crazy happens, maybe it goes in my favor. If not, I don't lose any money. But last night I decided, you know what? I am not going to step into the arena this afternoon, unfortunately. Unfortunately that I won't be partaking in what can sometimes be a lot of fun, but fortunately for me, I won't be getting burned on some of that crazy price action that we are destined to see. So the charts themselves, as we go into today, guys, bulls in control. 50 SMA is going to be important on both the charts. Clear uptrends right now, but of course we'll have to see if that keeps up after 2 p.m. and after JPOW does his thing. All right, guys, let's go over to Ramsay Rippers for Bet the Bell. For the system, I'm going to pass it over now to Ramsay Rippers for Bet the Bell. Good morning.
Good morning, guys. Ryan, pull them up. Let's check out the stats. The guys are on a tear. Literally, we have not had a change in the loss column for about a week and a half now. I think our last 4 episodes, everyone's perfect. Mo's kind of climbing. He's climbing the ladder. Diamond in the lead. but we do have to say, I'll say it for Hondo. He does have the most wins. Digest it. Let's get after it. We got a good one today. As Alejandro likes to state, today is a volatility-inducing event. We have a volatility-inducing event today. Indices are looking perfect for this question. Going to basically open up flat if we were to open right now. SPY down, SPY down not even a tenth of a point. Green or red today, FOMC at 2 p.m. Alejandro, what do you got?
I am going green. Going green.
Gang green. Mo.
Green.
Mander.
I'm going to take red. I think we do get volatility induced that is not being priced in right now.
Volatility inducing, man. Learn it, love it, live it. Diamond.
I'm also going to go red.
And Snipe.
I'm going to have to go with green.
Love it. We finally got some parity within the question. Perfect day to ask it. All right, let's move on to our next question, Ryan.
Wait, what did Noah say? I didn't catch it.
He said red.
Oh.
Oh.
Here we go. We're finally somebody's gonna take a step ahead of the other person.
Someone's taking a step ahead.
Well, I lose. You're still in third place.
I was about to say I low-key feel like it's
This
me,
guy.
like it's me
What's
creating
his deal,
a
man?
rivalry that's not really there.
What's his deal? As chilling in third place. A lot of talking from the passenger seat over there. Very strange.
We got to put together some sort of collage of the shit talk because it's been we've had it on like 1 out of every 3 episodes. It goes back and forth.
Yeah, it'll
All
take
right,
Ryan like 4 hours.
Next question. Let's do it, Ryan. I want to talk about QQQ a little bit today. Let's pull up that chart. So basically, the question of the day is: does QQQ make a new high of this range that we're trading in by the end of the week? It's been a really strong recovery after about a week and a half ago. That dump off of the retest of 300 level just about. March 6th, we retested 300 and dumped down to 285. And it's just been a rip fest since. Almost a green day every single day. Huge recovery on when we open up red as well. We are trading at 309.80. That high is listed at, I believe, 313.70, 313.68. You guys think that we make a new high this week? Hondo.
I do. I'm going to stick with my thesis of today being green. And that being said, I think we can make a new high today.
Yeah, I completely agree. I mean, this is also I kind of want to create the guidelines of the question. Maybe I'll get Mander's input here. I mean, one candle on FOMC could even send us to that level. Is it fair to say, do we take new highs just off of a break of that level, or should we kind of change it to a hold by the end of the week?
I think you at least need a daily candle close over that, because if they pop it to grab liquidity and we dump, then
right, it's kind of BS.
Yeah.
It's the same thing that happened with we had an Amazon question a week and a half ago. I believe it was what comes first, 90 or 100, and they wicked it down to like 89, 90. They filled the gap and then ripped it. So that's what we'll do. We'll do get a daily candle close over that level. Hondo, you're still saying it?
Yeah.
Mo.
Yeah, I do think we'll get new highs, but I don't think we will hold them by the end of the week. I think we drop back down below that 313 level.
Mander.
Coin flip here. I think literally like whatever we get today is what happens. If the market's like what Powell says, we close above that today. If they don't, then I think we got the top of this recent rally. But I'm going to say no.
Diamond.
I'm going to say no new highs. No new highs.
No new highs. And stock Snipa.
I think we break it, and I think we close above it.
Love it. All right. Next question. GME, the biggest story in the news right now. I mean, guys, come on. This thing's up 50% right now. It's making a climb right back to that $100 level.
Not the biggest story in the news.
The apes are stoked. It's only about 75% off of that $100 high, if you want to call it. What do we think? We think the meme stocks are starting to get a run, or is this just another shit can in the trash? Hondo.
I am praying that they're going to get a run. not because I'm involved in any of them, but I feel like we need something like on FinTwit. We need something to bring back some energy. I was talking to Diamond on Monday. Everybody's just like super pissed off all the time, it seems like. And the macros got everybody uptight. Can we just have like a stretch of a week or two where everything is just, I want to see all the memes flying. I want to be able to I want to be lottoing AMC calls by the end of this week. I don't even care. Let's get after it.
Dude, I'd love to see it too. Mo, I saw you cracking up a bit.
Dude, this happens every time, right? We get this little pump, this huge gap up, earnings, news, they're like cavemen. They come out of their cave with their beard and like tore up clothes, hoping, all this hopium. I don't know what it is about, the obsession with AMC, GameStop. It's had its run before. Many takers have done this before as well, but I guess it's a cult, right? But no, man. I think we're dropping. I'm actually looking. I was talking to the boys, potentially shorting this at open. GameStop. I don't think it's going to continue to rip. I don't think it'll hold.
Squeeze them.
Yeah, just a bunch of cavemen coming out of their cave, man. I'm telling you, they come out once this thing gaps up, either AMC or GameStop, and we'll drop. Hey, don't be surprised if GameStop is back to where it closed. So let's see what happens today.
Oh shit.
Mo, have you not heard the saying, no mercy for anyone who fades the apes?
Yeah.
Come
No
on, man.
mercy for anyone who fades the apes, man. So
Mander.
far, you would have probably been a millionaire by now. You faded every gap up.
Mander, what you
I'm
got?
going to say yes to both your questions. Is this a can of shit? It for sure is. But do I think the memes can get a run? Yeah, I do. I think GameStop finally had their first profitable quarter since who knows when. I think some people might flood into this and get excited again.
Confirmed. Money Mander is bullish on the market. He's bullish on AMC, and the bottom is in.
I'm gonna open some bags on BBBY before they go bankrupt. Let's see $5.
Yo, this is historic. Check this out. Mander's bearish on the market, but bullish on memes. That's something to take in. That is something to take in.
I don't think they can run in parity. We could see a squeeze here.
Let's see.
I'm messing around. Diamond.
Look, I share most sentiments to a degree. I'm not going to be quite as demeaning, but it's at some point you got to stop drinking the Kool-Aid, right? Like these things kind of happen all the time. And I mean, I hope that this thing goes back to $1,000. I have no GameStop, so I mean, if it does, I won't make any money. But just so that people could like stop talking about it, I hope that they just rip it to 1,000. If you have some shares, you get a chance to sell it, and if you don't sell it, I don't know what to tell you. The whole like I'm never selling thing, like if this would be the most entertaining outcome would be to see GameStop at 1,000. So I'm rooting for them silently. Do I think it's going to happen in reality? No, I don't.
If it sees 1,000, I think then everyone just starts calling for 2,000.
We got a long way.
That's literally that's what I'm saying is like recognize a win. Like the stock is up 50% overnight, and like people are going to come out. Oh, this thing's going to go more. It's like it's up 50% overnight. Like if you weren't positioned for this move, then you probably have no clue what you're doing in regards to GameStop, right? Like if you're somebody who has been sort of planning for this massive run up, and somehow the stock just gapped up 50% and you're not in the green, I don't know what to tell you. Like you got to look in the mirror at that point, right? It's not necessarily these people trying to screw you. It's like stock's up 50%. Like you should be green.
Wait, that's the problem with trading. Traders are never satisfied, right? So,
yeah. And it's tough to realize a loss in any case or scenario, especially when you get a move like this overnight. You want more and more. But listen, man, if I was in the boat, I'm realizing I'm taking the loss, taking what I can getting the hell out of there. Snipe, we'll finish with you, and then we'll go back to Hondo for Mo.
Yeah, I'd honestly be willing to bet that that's not going to run. But it would be super cool if it does, and I'd love to see it do that. But yeah, 50% move, that's just like Diamond was saying, that's a win.
Alrighty, appreciate you, brother. Thank you, guys. We'll pass it back to Hondo.
All right, it's time for Moe Mamba market analysis.
Go ahead. share my screen. It's massive, massive. They were just infamous trend line right here.
Mo, muted, brother.
Oh, sorry. All right, SPY daily time frame. Sorry, guys. So this daily trend line is what we're gonna hit on today. One other trend line as well. Last time we were on BTB, we had talked about this this 379 level. I wanted this level to come down to. We never got there really. If we broke and held, I was looking for a move down to 370, 371. Never got that. And then you have this nice little uptrend into this trend line here, but it looks like it right now, right, on this daily time frame. Nice, but this has been, tough PA, very volatile. You got nice pump, dump, gap up, dump, pump, gap down, pump, gap down, and then you got a not strong move, and then you gap down again, and then you dump. So it hasn't been easy to trade this price action, especially for swing traders too, mainly for day traders actually. But we came back into this trend line, we rejected it, gap down. Now we closed above it. This is bullish, right? This is bullish. What I'm expecting today is a move into this supply zone, daily supply zone. Now, one thing to watch out for is this daily trend line over here. Look out for this. I'm expecting this to be tested. Where this is about today, it'll be about 401, 402. If Powell comes out, if King Powell pumps the market, I am expecting this supply zone to be tested. And if we do get through, I would be surprised. Surprised if we close above 408.3 here on the daily. This is a gap to be filled. We have not filled it yet. So if we do come through, maybe fill the gap. This would be an insane pump if this happens today, but 408.3 is a gap yet to be filled. One thing this will, completely flip my bias on the market, is if we come up and close above this high over here later on the week or next week. Why? Because this is the pattern that's been playing out since the highs, right? You remember we hit on this pattern since the highs, where you're constantly making new lows, and you're looking to make new lows. It's still been playing out. It still has been respected. So, the highs I have, if we do pump, I would say a gap fill up into 408.3. Not targeting that today. That would be an insane move. We've seen moves like that before. It could happen. But for now, I would watch this trend line here. If we wick into this daily supply and then sell off and close below this trend line, I'm bearish come Thursday, Friday. So remember, I hit on that. I do think the Qs will break that high, right? But I don't think we'll hold off. I think this FOMC will get us a nice pump on the market, trap some bulls, and then flush us come Thursday and Friday. Take it day by day, and we'll see what we get. That would be a Honda. Thanks.
Thank you, Mo. That's going to do it, guys, for this morning's episode of Beat the Bell. Thank you for joining us. We'll be trading live all day in the Kane Capital Discord. You can go to kane-capital.com. Remember to manage risk, trade smart. It is FOMC. Don't be an idiot. And we will see you guys back here on Friday morning at 8:30 a.m. Eastern Time. Have a phenomenal rest of your day, everybody.